Dawood, CEO of ARK Investment. Very happy to see you today in Riyadh, and thank you very much for joining us. What do you think of Riyadh? It's your first time in 10 years, right?
Yes. What do I think of Riyadh? It's very exciting, the vibe here now. It's exciting seeing, learning here that of all the people employed in technology in Saudi Arabia, 38% are women versus 10 years ago, probably zero or very close. It's an amazing transformation, and the excitement is in the air. So I'm thrilled being here.
I think it is amazing what's happening here in Riyadh. Kathie, the US stock market hits another record high.
Yes.
With Apple and Microsoft crossing the $4 trillion market cap.
Yes.
Are we in a bubble, or thanks to the AI boom?
We do not believe we're in a bubble. I think the reason many people are afraid that we're in the bubble is the most seasoned investors in the market today were in the market in the tech and telecom bubble, and they remember the bust very well. There's a lot of scarred tissue.
Exactly.
I actually think that the worry about a bubble is good for the market. The strongest bull markets climb a wall of worry. I was in the market during the tech and telecom bubble, and that was not a wall of worry. That was investors, speculators, including taxi drivers who never invested before, just throwing their money into a dream. But the technologies weren't ready back then. The costs were too high. The seeds were planted back then, and they were chasing the seeds, which have been germinating for the last 25, 30 years. And now they're beginning to flourish. And so I think the fear is good.
Yes.
It will prevent craziness, the craziness that happened during the tech and telecom bubble when investors, again, just threw money, threw capital at eyeballs. How many eyeballs will there be on the internet 10 to 20 years from now? That's how crazy it got. The investors today are doing really diligent work on the kinds of cash flows that not only AI will deliver, but robotics, energy storage, blockchain technology, and multi-omic sequencing. So 5 major platforms evolving today. And I don't think people understand how profound the changes are going to be.
Tell me more about the impact of those 5 platforms that you've mentioned on the global economy and the US economy that you are very optimistic about.
Yes. Well, these are what we would call embodied AI. And they involve the convergence among these platforms. So they're involved in autonomous mobility or robo-taxis. Are 3 of the platforms converging? Autonomous vehicles are robots. They will be electric, so energy storage. And they'll be powered by AI. Now think about that. Each of these technologies is following its own S-curve, slowly, slowly, then all at once. And they're feeding each other. So you have one S-curve feeding another S-curve, feeding another S-curve, and we think it's going to lead to something called super exponential growth. What does that mean? Exponential growth means rapid growth consistently. Super exponential growth means rapid growth accelerating. So autonomous mobility will transform the transportation sector. That is the largest embodied AI opportunity. The most profound embodied AI opportunity is going to be in healthcare. And because of AI, we think the costs to discover and develop new drugs are going to collapse. It takes today a biotech company, including all the failures it has to go through, about $2.4 billion to bring a new drug to market. We think within 5 years that will be down to $600 million. We also think, thanks to the convergence between AI and sequencing technologies, so DNA sequencing, RNA proteins, that single cell sequencing, that we're going to be able to diagnose diseases like cancer in very early stages with blood tests. With blood tests, you don't have to do biopsies.
I hope
it's
so.
already beginning to happen. And if we discover disease in early stages, then what's going to happen to healthcare budgets worldwide is that the 85% of funds that go to sick care can transition to preventative care and early diagnosis.
So it is technology, the main reason you think we will have a better growth going forward, and especially for the US?
Yes. Well, I think this growth is, any country that embraces the growth harnesses these new tools. And we see Saudi Arabia, and in fact, the Middle East generally, becoming a very important player in certainly AI, but really all innovation. The Middle East has the power that much of the rest of the world does not have, or because of regulation cannot get at. And so what I think is that technology is going to bring the world together. And I think it's going to be a global phenomenon, although I think it's very important. And we see here in the Middle East, the leaders, this is a top-down movement, as it is in the United States.
Of course.
Get that regulation to a point, lower the regulations. They're too restrictive. Make sure to maximize safety, but not destroy these new technologies. And I think this is going to be a global phenomenon. And the growth rates, we think, are going to move the needle for real GDP globally. We think that global real GDP growth will accelerate from 3%, where it has been for 125 years, since the last technology revolution, which was internal combustion engine, telephone, and electricity. That was late 1800s, early 1900s. We've been at 3%. We think real GDP growth globally will accelerate to the 7 to 8% range during the next 5 to 10 years.
Wow. Since you've mentioned the investments done by the GCC, I would like to ask you about your take on the significant investments done by the UAE on data centers and AI, of course, the sovereign funds in partnership with tech firms and international partners.
Yes. Well, I think they're fulfilling a huge need. I think many people thought in the early days when ChatGPT came around that, yes, data center growth would accelerate. But now that we're seeing the ramifications of AI, the widespread productivity gains, we're seeing them most right now with individuals. Individuals in companies with their own projects. I'm sure your writing has gotten faster, as has mine, thanks to Chat. So our productivity has gone up. Enterprises, it's going to take more time for productivity to accelerate dramatically because they have to restructure. And they are going to really be harnessed to AI in order to participate in this new world where real growth will accelerate. So we think that the UAE and Saudi Arabia and all of the data center expansion, thanks to the resources you have here to power these data centers, are an important part of this movement.
And it will probably help overcome so many challenges in the sector, right?
Absolutely, absolutely. I mean, in the United States, I think that the power constraints are so significant that a person like Elon Musk, in order to generate power for his data center in Memphis, Tennessee for XAI, he's had to bring in generators and string them up and in a very inefficient system right now. The efficiencies here, because you have the power resources and you have the regulatory environment, which is giving companies the go-ahead to move as quickly as they can. That's part of the solution to the global problem we have here now.
Speaking of Elon Musk, you've backed him up through every twist and turn.
Yes.
What is the next chapter for Tesla beyond EV?
So EVs are now giving way to robotaxis. The first robotaxi launch was in June in Austin, Texas. And we're watching how quickly Tesla is moving. It is moving so much faster than Waymo because it can.
Wow.
And we think its cost structure is much lower than Waymo's. So we think that Tesla is in the pole position to grab the lion's share of the market in this winner-take-most project. It's the largest AI project in the world. And we'll see how successful Tesla is elsewhere in the world, but we believe it's going to be very successful in the United States. Beyond that, and really in parallel, Tesla is using the same three technologies and innovation platforms, robotics, energy storage, and AI, to power up humanoid robots. And we think that market is going to be 2 to 3 times bigger than the robotaxi market. So we can see growth rates extending through the next decade, thanks to robotaxis and humanoid robots. And in this way, when I use that expression super exponential, if you are able to use 3 platforms for a completely new way of doing things in transportation, and then use the same 3 platforms again, need to modify them. Humanoid robots are much more complex than robotaxis, but we can retrofit those 3 innovation platforms and move into humanoid robots. I don't think there's another company on earth that can see very rapid growth rates extending through the next decade, not just this decade, but through the next decade.
I can tell how excited you are about this. Let's go back to the dollar with the rise of crypto and gold.
Yes.
Do you think that the dominance of dollar is at risk?
So what's happening right now, we know that countries like China are taking down their dollar reserves. They've taken down their dollar reserves from 1.2 trillion to roughly 700 billion. And they seem to be continuing. I don't think the trade battle has helped change that. At the same time, we're seeing the rise of stablecoins. Stablecoins have accelerated to roughly 300 billion. And we think stablecoins, the largest of which are Tether and Circle mostly in the United States, Tether in the rest of the world, they are backed primarily by Treasury securities. So again, they're dollar-backed. So we think this is going to offset a lot of what China has done in terms of dropping reserves. In terms of gold, we have analyzed the market value of gold to M2 in the U.S. And we use the U.S. because dollar is the reserve currency. Yeah. There are only 2 times that ratio has been higher. One was in 1929, 1930. That was the Great Depression. And gold was a flight to safety because banks were going out of business, and there was a lot of contagion in the banking system. We don't think we're in that environment. The second time it reached this level, a little above this level, was in 1980. at the end of the great inflation started in the 1970s when the U.S. closed the gold window in 1971. And what happened after it reached that level? It then proceeded to decline for years. Why? Because the flight to safety or the hedge against inflation was no longer needed. We think this time is going to be more like that time. So we would not be surprised to see gold peak out in the near term. And yet cryptocurrencies, we think, will continue to move forward because they represent not just an asset class, but a technology. And in the case of Bitcoin, a new private digital rules-based, that's the most important phrase, rules-based monetary system.
So you still believe it's going to hit $1 million?
Yes, we do.
Do you even have in mind the time frame that you think that it will hit $1 million by then?
So what we've been saying, our bull case has been 1.5 billion.
Yes.
But we're seeing stablecoins usurp one of the roles of Bitcoin.
Yes, exactly. You just mentioned that.
Yes, in the emerging markets especially. So maybe $1 million is more our bull case.
It's going to slow it down a bit, you think?
Yes, I do. Our base case is roughly 750,000.
Wow.
So from 150 and 120,000, we still have a nice way to go. And we think that will happen by or sometime in the next 5 to 7 years.
7 years. I'm going to go back to gold because it's very interesting what you said. So in your mind today, gold is an investment, a hedge, or a saving?
So gold is both a store of value, as is Bitcoin. Gold is a hedge against inflation, as is Bitcoin. It's also a hedge against deflation, counterparty risk, as is Bitcoin. But it is not a technology the way that Bitcoin is. If you think the Bitcoin blockchain is the layer of the internet that the developers in the late 80s and early 90s did not build. And they didn't build it because they never dreamed that commerce and financial services would take place on the internet. Think about that. That was a long time ago. In fact, everybody was saying, I'm never putting my credit card on the number on the internet. Well, that changed quite a bit. In the meantime, we've had to use instruments like credit cards and debit cards, but no native currency. Now we have a native peer-to-peer currency, so we can take a lot of the middlemen out of the equation, and that's very important.
So if you had to choose as a safe haven for the coming next 10 years, will you go for Bitcoin or gold?
Bitcoin, hands down.
Quick round. I'm gonna ask you quick questions. I want you to pick one and tell me why. So gold and Bitcoin, you said?
I said Bitcoin.
Bitcoin. And for dollar or euro?
Dollar. Most people think the dollar is in decline. And it did have its worst year, the first half of the year, since 1973. If we're right on the fiscal policy, our corporate tax rate, given one big beautiful bill, OB3, our effective corporate tax rate, including the depreciation measures, we think is down to 10%, which is roughly the lowest in the world. And our deregulation, from very high levels of regulation, our deregulation is moving very quickly. We think the returns on invested capital are going to go up relative to those in Europe. So we'd bet on the dollar.
That's good, but since we've mentioned this race also between China and the US, when you look at what China did when it comes to AI and deep tech,
yes,
do you think of it as a threat or an opportunity? You are an important American investor for you and other American investors.
Yes. Well, I mean, you can think of it as a competitive threat.
Okay.
Now, there's nothing like competition to get us going. And now we have regulations coming down and tax policies supporting innovation across the board. We had our hands tied behind us on nuclear policy, on rare earths. I didn't know until recently that in 1980, our regulators in the U.S. Declared that the waste from rare earth mining was nuclear and was to be regulated like that. No wonder we don't have rare earths. That is changing.
Yeah.
All of that is changing. So I think China has capitalized on our regulations increasing over the last 25 years. Now it's game on. So, and we're very impressed with what they've done in AI as well. DeepSeek was a moment, right?
Yes.
It was a moment. And even Sam Altman and Jensen Huang in the United States complemented the algorithms that they introduced. Now they're open weight models, so now we can use them, which is very interesting that we're having all of this angst about chips, but not about the software. That's very interesting.
True.
So I think we're getting closer to striking a trade deal. And, you know, from a national security point of view, I understand that one of the primary roles of any government is to protect its nation. So I think we let our defenses down also. And so those are going up. But that doesn't mean that this competitive threat is necessarily bad if the shackles are off of us now, and we think they are.
Of course. The last one, I know probably the answer, but I'll ask it anyway. U.S. stocks or China?
You know, it's very interesting. We moved out of China in 21 completely, and we've just started moving in because the valuations are so low there.
Okay.
If we get a trade deal, I think the valuation gap will close, or at least close somewhat. So I think Chinese stocks are going to do pretty well. The risks are higher, though, because we've seen Xi Jinping, one of the reasons we moved out, there was the nationalization of online education. They did banish some of the greatest tech entrepreneurs, and that's not a welcome environment for innovation. So there are risks, and I think there are more risks there than there are in the United States. But the valuation gap is so large that I think China is going to be a very good place to invest.
Amazing.
If I had to choose between the two, if you're a foreigner and you invest in the U.S., you'll get the U.S. upside and the currency upside.
Amazing.
So,
amazing.
yeah.
Okay, last one question. If I have $1 million, I don't, but let's just assume I do, and I trust you, where shall I invest? Where would you advise me to invest?
Okay, I'm not an advisor and I'm not allowed to give advice. I know what advisors would say. Make sure you diversify. Don't put all your eggs in one basket. But what I will say is most portfolios are short truly disruptive innovation. They think they have innovation because they have the Mag 6 or the Mag 7, right? We think the amount of innovation taking place away from the Mag 7 is going to deliver returns that are going to be twice as good. So if we're right, and this we have in our big ideas 2025, if our research is correct, and that's a big if, but if it is, then companies involved in truly disruptive, technologically enabled innovation are going to deliver returns that are in the 40 to 50% range at a compound annual rate because of the super exponential growth that we expect. We think that innovation in stock market indexes, the broad-based ones, will go from roughly 30% now to roughly 80%. So we think innovation is going to grab the lion's share of the appreciation going forward. So don't be short truly disruptive innovation. Make sure you allocate enough. It's more risky, but with higher risk comes higher returns.
Of course. One challenge that keeps you up at night?
What keeps me up at night?
Nothing keeps you up at night?
No. When I go to bed, I am out.
That's amazing. On that positive note, I'll wrap up. Thank you very much, Kathi. I really enjoyed the chat.